Today is the Saturday and I'm back with another market outlook trading video. We just came out of a very difficult trading week. Okay, at one point we were up quite good amount of money, but after that eventually we gave back portion of it back to the market. Okay, so this is the reality of trading. So in today's market outlook video, I want to change things a little. I want to run you through the results for this week first. I want to talk to you about risk management, okay, because my team has been handling a lot of issues like this. So I think it is my job to educate you to change your mindset about how you view trading as well as how you manage your risk. As a very quick refresher about this week's performance, okay, you can see it's not fantastic. If you join our Telegram, you will know that we are just barely up 61 pips. It's not fantastic result, but nonetheless, we didn't lose money. That's fine. Okay, these kind of weeks do happen. We don't make money every single week, or we don't make money every single month. This is something that you have to understand. It's not possible to make money every single week or even every single month. We do have losing months. That's just the reality of trading. Now, I want to address the issue of risk management first, because many of you mismanage your risk, blow your account, and write in angry email. So I want to address this point blank. I want to show you why it is a very dumb idea for you to be risking a big percentage of your account on any single trade. Okay, not just based on our signals, but any other signal providers or any other strategies. You don't want to be risking a big amount of your equity on each trade. So right here, I have this picture here, which shows you the probability of you having consecutive series of losses. So you can see right here that even with a win rate of about 65%, if you just look at this level, you can see that the probability of you losing 4 times in a row, or as good as 5 times, because it's 99%, which is almost 100%, it's almost a fact that you will eventually lose 5 times in a row. Okay, so if you're going to be risking 5%, 10%, 20% per trade of your account, suppose you have a $1,000 account and you risk $200 per trade, it is a fact, okay guys, it is a fact that you will blow your account. Okay, it's only a matter of time if you approach trading like this. Now, even if you somehow manage to get your winning rate up to 75%, which is almost impossible, all the strategies that I see that work in the long run, they usually average somewhere between the 50 to the 65 mark, somewhere around here. Even if you get it to 75%, you can see that the probability of you losing 4 times in a row right here, okay, is still 98%. So it's still very high. So what's the lesson here, guys? If you want to be trading, do not risk more than 3% per trade, guys. Please listen, okay? Please listen carefully. I cannot help you if you want to be stubborn about it, if you do not take the time to internalize this, okay? If you want to trade, whether it's our signals or any other signal providers or any other strategies, please manage your risk, okay? If you blow your account being stupid, okay, it's none of our business and we will not help you, okay? Just to set the record straight, because my team has been dealing with a lot of these kind of issues and I don't think it's fair to them, okay? Maybe it's my fault, maybe because I didn't educate you properly about this, but now I'm doing it, okay? So I'm spending the time today on a Saturday telling you as it is, okay? So please bear that in mind. That's a bit stern, but I really hope you get it because I do not want you to blow your account, okay? So back to the market outlook video for this week, okay? Let's look at the Forex Factory Economic Calendar first. Okay, so today is the 4th of September. We are going into next week, which will be the 7th of September to the 10th of September. Okay, so next week, we do not have a lot of things, a lot of high impact news, but we do, however, have this right here, which I hate. Okay, I hate this ECB press conference right here. So next week, expect it to be difficult. Now, if you're a new subscriber and you do not know why I do not like ECB, let me just explain to you. During press conferences, no one has any idea of what may be said or may not be said. So for this reason, most of the time, big institutional players do not go in before the event, meaning that on Monday to Thursday before the event, they do not trade big. Okay, I mean, it's just logical. If you cannot predict what will be said during the statement and the conference, then it makes sense for them not to go in big. The market tends to be very whippy and it doesn't really trend one direction. Okay, so next week is probably going to be very difficult. Please manage your risk. We also have this BOC press conference. So technically, we have 2 press conferences. Okay, so next week is probably going to be a very difficult week to trade. So please, what I said about risk management earlier, please bear that in mind. If you have a $1,000 account, do not risk more than 3% per trade, which is $30. Okay, very straightforward. If you cannot follow that, then you're going to blow your account. Moving back to the charts, now I'm at DXY, which is dollar index. Okay, so as always, what I'm going to be doing is I'm going to analyze this currency pairs here, and I'll be using the MPE trading strategy, which I have for you right here. Okay, so if you're new and you haven't yet downloaded this 3-day trading guide, just head over down to the link in the description down below or the pinned comment, and you'll find a link to this PDF. Okay, just input an email and we'll send it to you. We'll be using the MPE trading strategy, which stands for market condition, price level, and entry. Okay, so I'll be breaking down the charts right away. So this is DXY. Okay, so DXY right now is looking a bit tricky. Now, market condition wise, I do believe that our long term is still up and we are at support now. However, if we were to see the short term, just look at this pattern over here, switch over to the line chart, you can see that this is actually a head and shoulders pattern. You have the left shoulder, the head, and the right shoulder. So right now, price is at support. I do think that eventually price will still go up, and anyway, price is at support now. So next week, I do expect dollar to strengthen, to go higher. Just take note of this resistance, okay, because this was previously support. I do expect price to be resisted somewhere here. So just be patient, look for dollar to strengthen. Anyway, most of you will not be trading the DXY, so if dollar is going to be strengthening, then you probably want to look at shorting euro dollar or shorting pound dollar. Okay, that's how you use this analysis. Okay, so this is the first thing that you want to know. Moving on to euro dollar. Okay, euro dollar, right now I would say that it's more bullish. Okay, market condition is bullish because previously we had high, low, lower high, lower low, and then after that price broke above. Okay, if you switch over to the line chart, you can see that there is sort of like an inverted head and shoulders pattern here as well. Left shoulder, head, and right shoulder over here. So this is a reversal chart pattern. Now the issue is that price is very high now. Price is at resistance. Just look to the left. You can see that this level is very strong and price is right smack at resistance. So please do not be in a hurry to buy. Okay, remember we have conferences happening next week. So I do expect price to just consolidate and not move much. Now, if price drops, then ideally I would be looking to buy off this level, 1.1793. I think this is a good level to buy. If you just look at here, look at this swing high, it's pretty obvious why this is a good level because it's a swing high. Just wait for it to come back down. What we need right here is we need a candlestick pattern. Again, we are following the MPE trading strategy. M stands for market condition. Market condition is bullish because we have a reversal chart pattern. Price level I've given you is this level right here. The last thing that we need is an entry trigger. So what's an entry trigger? It will be a candlestick pattern, which I've already described in this 3-day trading guide. It could be a hammer, could be a shooting star, could be an engulfing pattern. Now moving on to pound dollar. In last week's market outlook video, I did talk about this level. I said that, okay, ideally we want to look for a bounce of this level and towards here. So we kind of got that. Okay, this candle here was actually a candle that showed that this level was actually holding as support. True enough, after that, price went up. And right now, price is in the middle of nowhere. Okay, so do not be in a hurry to chase. I do not know whether price will retrace back to this level again. But for pound dollar, I do think that the market condition, you want to lean towards the bull side because of this. Let me show you. You have a high here, you have a low, you have a higher high. Okay, so the market condition is bullish and you have a strong price level here. Now, what you need next is you need patience because price is in the middle of the support here and the resistance here. If you chase after the market right here, then you are buying in the middle of nowhere. So just be patient. Wait for price to come here, look for a candlestick pattern here, and then you can buy it up, okay? Dollar franc, I don't want to spend too much time because as you can see, price is actually trapped between the descending triangle. Okay, so it's a very tight range. So I would say that price is in a range right now. I do not want to say it's bullish or bearish because there is no clear direction. I just want to highlight that if you were to switch over to the H4 chart and you just plot the lines like that, the descending trend line here and the horizontal line below, then you can see that price is actually consolidating, and I would say try not to trade within this zone. Wait for price to do a decisive breakout, whether it's to the downside or it's to the upside. Now, once you get that, let's say it breaks like this, then you just want to look for the retracement back to the level, a candlestick pattern, and then you can go ahead. Same thing for the upside, it could be something like this. just break above, retrace candlestick pattern, and then you can take the trade long. Okay, that's how I would do it. I will not trade within this zone here. Kiwi dollar has been very strong. Okay, it's probably the strongest currency pair this week, which unfortunately we missed. We wasn't looking at this. Anyway, it's just, chasing after market, because on Thursday when the candle closed here, you can see that you are already very high. So we didn't actually chase this trade. That's fine. Okay, there's always going to be other opportunities in the market. Now, I think the market condition is bullish. However, I just want to point out that if you were to look at a bigger picture here, you can see that this is a high, this is the low, this is the lower high and lower low. So in a sense, this high hasn't been broken. Okay. However, this movement up seems to be very strong, but price is at resistance right now. How I would trade it is I would just wait for price to retrace back down to this level, find support here, and then I will buy it up. Do not be in a rush to buy right now, because we are right smack in the resistance over here. Okay, just take note of this level, 0.7053. Okay, it's pretty obvious why this is a good level. Switch over to the line chart and you can see that this is the recent high here. And if you just look here, this was a level as well. Now moving on to Aussie dollar. Aussie dollar is quite ugly. This was the low, this was the high, lower low, and price on Friday closed above this. However, we do not really see a reversal pattern here. You don't see a double bottom. You only see a very ugly looking inverted head and shoulders. Okay, I won't really consider this as an inverted head and shoulders. The idea is still the same. There is a higher low here, you have a low here, higher low here. Okay, so this is how I see it. I see that the market condition is more bullish. The next thing that we need is we need a price level. So I have the price level right here. So just be patient, wait for price to retrace here, look for a candlestick pattern, and then we can buy it up. Bullish bias for this one. Now moving on to dollar CAD. Now dollar CAD, last week I did talk about buying on this trend line, and we actually went long and we got stopped out. We were expecting the price to go below the support, this support drawn, to whip out all the stop losses, and after that start going up. Okay, it didn't happen. Okay, so this is why it's important that you manage your risk. Things like this do not work 100% of the time. Okay, even if it's 80% probability, there is still a chance that this doesn't work. Now, this candle on Thursday broke the trend line. Okay, so I would say that right now market condition is more bearish, because if you were to look at this pattern here, you have a low, high, and this low is broken. So I would say that I would lean towards the bearish market environment or market condition. Now, price is here, so just be patient, wait for price to retrace higher to this level, and then look for a candlestick pattern to shut it down. Be very patient, do not chase the market, because right now price is in the middle of nowhere. This is resistance, this is support. If you sell here, then you are selling in the middle of nowhere. Moving on to dollar yen again. Dollar yen, I don't want to spend too much time, because I've been talking about this for the past few market outlook videos. I said that dollar yen is in a very big range, going nowhere. The levels are still intact. This is resistance, this is support. Personally, if you are trading the daily time frame, I don't recommend that you trade at the support or sell at the resistance. What I recommend is that you wait for price to break out of this entire pattern, something like this. Breakout, retrace, and then you look for the sell down. Or if not, towards the upside, wait for the breakout to the upside, look for the retracement, look for a candlestick pattern, then you go up. You might not get a trade on dollar yen on the daily time frame for maybe the next 2 weeks, 3 weeks, or even 1 month or 2 months, because it's been consolidating. In fact, it's been consolidating since July to right now, which is September, which is almost as good as 2 months. So be very patient if you want to trade the daily time frame. Focus on the other currency pairs. Don't need to try to force a trade right here. Moving on to gold. Gold had a nice bullish close on Friday above all these highs. You have this high, this high, this high, this high, and this high. So it closed above 5 days worth of high. The only issue is that price closed right into resistance. Okay, just look to the left, look at the market structure level. It's very obvious that this is a strong level. However, do take note that the market condition is bullish. Okay, let me just show it to you. This is high, this is low, high, 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 low, high, high, higher, low, higher, high. You want to lean towards buying. However, price is going into resistance right now. So I would say that if you really want to buy, then just wait for price to break above, look for a retracement down, look for a candlestick pattern right here, and then you can take setup towards here. The next level is here because you can see that here is kind of like the double top pattern, or if you were to switch over to the line chart, this is somewhat like a head and shoulders pattern, left shoulder, head and right shoulder. So this is the neckline, therefore this is an important key level. Between here to here, there's a lot of space, so if you can get a good setup right here, then you probably can go for a good risk to reward trade. Euro pound. Euro pound is a bit tricky. Okay, Euro pound I would say that is in a ranging mode. I won't say it's bullish or bearish because the highs and lows are pretty obvious. This is the upper end of the resistance and this is the lower end. I would say that I would see it as really a box, entire ranging box. Okay, I don't recommend that you trade setups like this because ranging plays are never easy to nail, and even if you get it right, you need to be very patient to let price slowly creep up. In a ranging move, price don't go one direction. It doesn't just bounce from here and go straight up. You can look at the H4 chart. You can see that it is really a mess. Even if you buy somewhere here, you can see that it comes up, it comes back down, it goes up, it comes down. Most people do not have the patience to sit through this kind of movement. They see that price goes up a bit, they panic and then they get out. So for this reason, I think it's not a good idea to trade range. Okay, I would say that if you really want to trade same thing as the other currency pairs, wait for price to break above or wait for price to break below. Again, we might not get a good trade setup next week, but this is all part and parcel of trading. Okay, you have to wait for the good setups if you want those high probability ones. Now moving on to NZDUSD before I end off with pound yen. NZDUSD is still definitely up. Don't look to sell this, look to just buy. Now this is consolidation. I'm not too keen to buy into consolidation. I ideally would like to see a deeper retracement down to this level. Okay, this is demand zone as well. Okay, if you watch my other video about supply and demand, this is demand. So just wait for price to retrace here. Market condition is up, look for a candlestick pattern here and you're good to go. This is very straightforward. The only question is whether we actually get this trade set up or not. And lastly, pound yen. Okay, pound yen, it's quite difficult. It's mixed. So let me show you why I think it's quite complicated to trade pound yen. Now, you have this trend line. If you were to draw this and this, you can see that price was rejected at this trend line. If you were to switch over to the H4, you can see that connecting this trend line to this trend line, then you can see that price is in a very tight consolidation. So in this case, I won't really give a clear direction of whether pound yen is bullish or bearish because it is still consolidating right here in a very tight zone. So one thing I want to highlight is that price is resisted by this very strong level. Just switch over to the line chart. You can see that this level is very strong and it's very close to this level as well. So it's no wonder that on Friday we had this shooting star pattern. Okay, but however, support is also very close. So if you really want to trade, then I would say that just wait for this trend line to be broken first. This is a little more advanced. Wait for the trend line to be broken first, then look for a retracement up. Now, I don't recommend that you trade this because it's not very clear. The market condition is not very clear. If you were to look at this pattern right here, low, high, higher low, higher high, you could argue that this market condition is actually bullish and you want to buy. And if you were to look at the other big picture, which is over here, let's count the waves starting from here. This is a high, this is a low, lower high, lower low. Okay, so it could be bullish or it could be bearish. It really depends on how you see it. So in this case, I won't recommend that you trade this, but if you really want to trade, then at the bare minimum, wait for this trend line to be broken first to confirm that this upward momentum is somewhat reversing. Look for a candlestick pattern of this level and try to catch the trade somewhere here and short it down. This is pretty difficult. Don't recommend you do it. So that's all I have for you in this video. I hope you got a ton of value. If you are new, right, do hit the subscribe button. Please manage your risk. Okay, I don't want to keep repeating this. I don't want to hear you blow your account. If you have not yet gotten the free day trading guide that I've prepared for you, please head over to the link in the description down below. It will take you to a website where you can input your email and we'll email it to you. There's a lot of value in this day trading guide. So if you're still struggling, this is where I recommend that you start. Okay, I recommend that you use the MPE trading strategy and I recommend that you stick to the daily time frame. That's going to make it very easy for you. Okay, do not go in the lower time frames because that requires more skill. Thanks for watching. Catch you in the next one.